Hello, everyone. Welcome to our Wednesday webinar. Just a quick yes and a no whether you can hear me loud and clear, because I was in a mute button. I was in a mute before and I was like speaking to you, but no one was actually listening. I don't know how I manage every single time to mute myself. Anyway, okay, cool. Thank you, Zimbabwe. Thank you, Edwin. So, as every Wednesday, we usually have a more of a technical webinar. So today we're gonna go through a quite significant and tricky topic, and that has to do with price action trading. So it's not an easy topic. It's not as easy as it seems. I will try to cover as much as I can today. I will try to give as many examples as I can. No screen viewing. Oh, that's weird. It's weird. Let me switch off and switch on again the screen. I'm great, thank you, Hoda. I'm great. So, yeah, as I was saying, it's a quite tricky topic. It's not as easy as it seems. So before I start, let's go through admin as usual. We have to read the disclaimer warning as always, as usual actually. So before I go through, okay, sound is already checked. I'm just letting you know that for any questions, please stick it in the box. I will try to reply as soon as possible. If there is something that I don't manage to cover during the 1 hour session, please email it to us. It's only me or Stuart or Nectarios that were replying to these emails regarding trading questions. If it's something to do with the support will reply. But if you have any kind of questions, either for the webinar, either for your trading strategy, etc., you can email it to us at webinar@hotforex.com or through Facebook. Of course, it's a Stuart Hot Forex Cowl page. Again, it's our team that handles that account. This webinar is recorded, so at the end of our session, you will receive the link to the link for the recording of this webinar. So admin, this material is provided as a general market communication for informational purposes only. Nothing in this communication contains or should be considered as containing investment advice or an investment recommendation or a solicitation for the purpose of purchase or sale of any financial instrument. We make no representation and assume no liability as to the accuracy or completeness of any information provided, and we should not held liable for any loss arising from any investment made based on the information provided in this communication. This communication must not be reproduced or further distributed without our prior written permission. Risk warning: trading forex and CFDs may not be suitable for all investors and carries a high degree of risk to your capital. Trading such products is risky and you may lose all of your investment capital. Admin is out of the way. Oh, Hoda is saying that he sent a request to Stuart on Facebook. It looks like his friend list is full. Any alternative? Yes, we have that issue actually, but you can still send him a message if you want to. So don't worry about whether you're friend with Stuart or not. You can still send him a messenger, and you can still see what we are posting in that Facebook page, because everything is public. If you face any issue, just let me know, Hoda. Okay. So yeah, that's me. I'm not saying anything regarding myself. I'm here to help. The same is for Stuart and Nectarios as well. We are here to help. Don't hesitate to contact us. Okay. So the art of price action trading. What we're gonna cover today, we're initially gonna see what we call price action. Okay, so it's how to trade without any indicators on your chart. This is what price action trading is. So it's like a naked chart, no indicators, nothing at all. Okay, so we're gonna see also what decisions we can take based exclusively on the price alone. Um, how we could set support, resistance, and pip bars, which are actually the key for this price action trading approach. So how to identify support resistance areas, key candle patterns, and how to finally set our entry and exit, and a smart place actually to set your entries and exit. So let's start. Oh, sorry. Again, as I already mentioned, price action. Think price action as exclusively the movement of a security, the movement of an asset. So is you if I bring my chart on, okay, is simply without any indicators at all, nothing. Simply your chart, your price movement using candlesticks. Okay, it's purely the price movement of the asset, yeah, that you're checking. So if I go back to the slide, sorry. So price action is simply another term of the movements of security, as I already said. The price action trading is a trading strategy. Okay, it can be we can actually say that it is a trading strategy, but without using neither technical analysis or any fundamental analysis at all, purely the price of the movement. I can't view the slide. That's weird. Um, Guys, I noticed two of you don't have a screen viewing. Can you please log out and log in again? So close the session and open it again, please, and let me know if you still facing this problem, because the rest of the team is fine with the screen viewing. Yeah, do that and let me know. So as I was saying, um, price trading, price action trading is a trading strategy that is neither technical analysis or fundamental analysis. It's purely with the price movement. So what we actually seen is the price movement, which, as you already know, is that constant struggle between bulls and bears. If I can say, is that fight between bulls and bears. Bulls want to push price higher, bears want to push the price lower. So we have this movement is created on the price of the asset. So uh, so price action traders, there are a lot of price action traders that they don't use any kind of indicators at all, and they don't use fundamental analysis, etc. They actually observe the latest price movement, and that is their technical indicator. The latest price movement is their technical indicator, and they place their trades based on their individual decision making, based on their own thoughts. Okay, so um, before I continue, I told you that the price movement is caused by this constant struggle between bulls and bears. So who are the bulls and bears in the market, guys? Can someone reply to me? Who are they? Is it us? We are the bulls and bears. We are the ones that actually move the market. Us as a retail investors, as a no. Thank you for that. So yeah, cool, great. Thank you, guys. Brilliant. How are they saying? The banks. Great. Yes, indeed. So we are, as a retail sales, we are less than 10%, maybe less than 5%. So we don't have actually a lot of impact in the market. who are the bulls and bears in the market? Are actually banks, as Hoda said, as Safeway, Eric said. So the people that actually trade billions are the bulls and bears in the market, are the ones that actually have the biggest impact in the market, and the ones that actually move the market. So banks, hedge funds, and in general, the people that invest billions and trade billions. So so these are, and I'm highlighting this because we'll see it later on, how we can actually um, why it's so important to identify the bulls and bears in the market. um, so as I already said, um, there are many traders that actually rely exclusively on price action to make decisions. So you can see price action can be seen actually and interpreted using simply your charts, and you observe the price over time. Okay, the only thing that we need to check and we need to always take care of is to identify support and resistance levels, and to carefully, very carefully observe the candlestick patterns. Okay, their body, their tails. Everything has to do with candlesticks. Candlesticks are the one that they're gonna give us the informations, and that's why we are using candlesticks and not not the trend line, because candlesticks preferably help you to visualize better the price movement by displaying the open price, high price, low price, close price, and etc. So candlestick patterns, or candlesticks themselves, but also the patterns that they can form, can give us a better understanding and a visual interpretation of the price action. So why I say that is a tricky topic, simply because it's very challenging to find an order in a sometimes seemingly random market. That's the tricky thing. That's the hard thing. You might have a random market and you don't really know why it behaves the way it behaves, but you have the challenge is to find an order of the market, of this random movement of price. You have to find a path. Okay. Are we in the same? Yes, we are in the same market, Hoda. Uh, we have a single market actually. Okay. Maybe the market is split into exchange markets. I mean, we have London, we have New York, we have Asia, and etc. But retails and institutional are in the same markets. So let's move on. So as price action trading is very common in both retails and institutional traders. So it might be less popular with the because a lot of algorithms came out, high frequency trading, etc., and that's why price action became less popular. But it's a very common trading strategy. So many pattern day traders will place very large trades, often with just the use of leverage, so using purely price action as their only guide, with the goal of benefiting, of generating, let's say, a profit from a very small underlying move. They notice, they believe that it will move in the future, in the next few minutes, hours, and etc. So they just observe the candles. So they only use their observations and their thoughts and the leverage, and so they try to reach their goal of generating a profit from a very small underlying movements. So that's why we're saying that technical analysis and fundamental analysis aren't especially useful in this case, especially for a very short term um, uh, price movements, a very tiny short term price movements. You can understand that technicals and fundamentals are not ideal, are not actually helpful at all. So that's why price action can provide can help you even in very short time frames, can help you to identify supply and demand balances. So as so you can understand, since a trader is exclusively focused on the price action movement without any indicators, the identification of a trade condition, okay, based on established analysis criteria. And what I mean by that is like purely the movement and no any kind, not without the help of any kind of indicators. The decision from a trader to buy, sell, or hold is quite subjective, because it's his own individual thoughts, it's his own individual criticism. Okay. So taking a trade position based exclusively on your own thoughts, this is the case in the price action trading, is quite subjective. So how does actually price action trading works is you initially identify a trade condition, you're making your observation, checking the price movement, and based on your own decision, your own thoughts, you could enter the market. So that's why we are claiming is quite subjective. Examples of price action trading could be either some swings that we could see in the market. Fractals are quite helpful on identify the swings, but are not necessary. Um, Support and resistance levels are examples of price action trading, and the breakouts of any ranges or patterns are also examples of price actions. Even the consolidation of the asset's price is still an example of price actions, and we will see that later on. So if, let's say, a short-term trader, okay, and I am saying by short-term, I'm saying that maybe a 30-minute one, 1 hourly one, a minute one, 5 minutes trader, a very short-term trader. If let's say he identifies a price, that his price, it breaks the previous candlestick's high price, then that occurred that there is a high volume in the market, and before he identifies the high volume, and he could actually take in a position based on that. So purely on his thoughts, he saw this movement, this break of the prior price that occurred a high volume before taking his long position. That was just an example, but we'll see that in practice. So I put those two pictures on because you need to, as I already mentioned, price action is based on an Eiget chart, okay, purely price movement. So that's why we're saying that it matters to be very careful and very careful on checking and try to identify the reactions of the movement. What this fight between bulls and bears indicates to you. So that's why the bodies, the length of the bodies and the length of the tails of the candlesticks is very important in the price action. Okay, so okay, we'll see that in the examples as well. So as I was saying, you understand that a trade occurs only when two parties, by saying two parties, what are fractals? Okay, if you're not aware of what fractals, it doesn't matter because it's not the case in this webinar. They can be helpful, but you can trade without them. It's not something that has to do um, that it needs to is necessary for price action trading. We have a fractals webinar already recorded. You can find it in our website. But by simple terms, I can say that fractals are some reversal indicators. Okay, but don't stick on that. You can watch our fractals webinars and it will help you. So on which time frames is more effective? Every single one of them. Okay, it's price action. It's price action. So it's purely the movement of the assets price. So you can actually um, use this kind of trading in every single time frame. That's why it's powerful but tricky as well. So as I was saying, you can understand that a trade occurs only when two parties, and by saying two parties, I mean buyers and sellers. So they are taking different views of the same, let's say, of the same asset, of the same currency pair, of the same metal, and etc. So that's why we have this trade, because we have two different views in the market, the buyers and the sellers. So in theory, the buyers and sellers should have access. They have already access to all kind of information about the particular asset. You can see it as a retail sales. You have access to every single information. All of you have the same access to the same information. And what I mean by that is access to the news, the same technical indicators, the same fundamental analysis recommendations. Anything that has to do with the particular asset is the same for all market participants. So despite that all of us have the same access to the same information, we will notice that some came with the opposite conclusion of what we came up with. So what I mean by that is the buyers, obviously, and the sellers came to opposite conclusions. So even by looking, let's say, this euro pound pair, uh, uh, in it seems that some people participating in the trade of this pair are actually selling and some people are actually buying. So we have two opposite conclusions, because some people believe that they will move upwards, so they are buying, and some people believe that they're going downwards, so they are selling. So why does this happening? Simply because each trader, each one of us, has his individual behavior judgment, and that is what it leads to trading with opposite views. Each one of us has his own judgment, right? It doesn't seem that it will never be the same. Okay, we will always have someone that has the opposite view of us. So that's what actually moves the market. So I put an example over here. So in this euro pound 1 hour chart, we'll see that in this over here, you can see that the blue line, which is the 5 moving average period, crossed above the gray line, which is the 20 period moving average. So it crossed over it. So this is this is a common occurrence. It is visible to all. Okay, if me and Victor, let's say, and Hoda and Solomon have we're using Bollinger Bands and we are using 20 period moving average and let's say 5 minute moving average, we'll see the same thing. We'll see that the 5 moving average crossed over the 20 moving average. So this movement can be a buy signal for some of us, right? Because the lower time frame moving average cross above the longer term moving average, and that is supposed to be a buy signal. However, for some others, it's a sell signal. Why is that? Uh, because buyers may base their decision um, based on the standard recommendation that moving average crossovers are giving to us, but some others, and the sellers in this situation may take an opposite view, and that's because they have based on the recommendation to buy on crossover will lead in an overbought situation. So they believe sellers, the buyers from one hand, we have that, okay, if they cross, this is a buy signal because this suggests more of an increase in the positive momentum. So I'm taking a buy position over here because I believe that it will go upwards. But the sellers, on the other hand, believe that okay, indeed is a buy signal, but I believe that it will lead to an overbought situation. And if we have an overbought situation, then eventually the pair will reverse to the downside because it's overbought. So they prefer, they believe that it's better to sell. So we have two opposite views of the market. So despite we have the same axis in the market, each one of us has his own judgment, individual judgment, and that causes opposite views. And that is actually what we see in our charts. These different views of the market, these different judgment. This is what actually drives the market as well. So I'm getting back to this slide because as I already mentioned, examples of price action would be swings, support and resistance levels, and the observation of candlesticks. So have this in mind before we see the because before we go through the examples. So stick those into the pot. Very, very significant is the support and resistance level. This sorry, let me try to highlight this highlighter. So okay, keep in mind that it's very, very crucial to be able to identify support and resistance levels. I cannot, for some reason I cannot use the pen. Okay, never mind. I will try to show you. Okay, the key step is to identify resistance support levels, and then the next thing that you have to have in mind is to closely and very carefully observe the bodies of the candlesticks. Okay, so and how we could do that. So how we could actually spot trades based on the support and resistance level and based on the candlesticks based on the candlesticks behavior. So how to spot trades? You have to have in mind this equation, let's say that I have written down over here. So support and resistance, okay, when we are trading with a price action, when we are using price action trading, if support and resistance along with any observation of indecision in the market implies to reversal, okay. And why I'm saying this. So as an example here, we have uh, S&P 500, USA 500. It's in a weekly basis, but that doesn't matter. But I just wanted to give you the best example possible. Okay, so, and if you zoom in this box, you will see that I have identified a resistance level in this in the top of the box. This line over here, this area over here is a strong, it seems to be a strong resistance level. And why is that? What can anyone reply to it? What is resistance? What we mean by say resistance level? Anyone? No. Okay. Yes, exactly. The price bounce back. So is the area in which is the ceiling, is the area in which we have a lot of sell pressure, and in simple terms, is the area where the bulls don't manage to push the price higher, and they reverse from this area. So is the area where the most of the sellers are, and they are like pushing pushing the price to reverse. Okay, so is this ceiling, let's say this resistance area, is the area where we have the most selling pressure in the market, while the support area is where we have the a buying pressure. So even if sellers, let's say, are pushing in this situation, if the sellers are pushing the price to go lower, we have a lot of bulls pressure over here. So bulls are fighting not for the asset to reverse to the upside again. So this is a support area, and this is the resistance area. So I have identified this resistance area because I noticed that the bulls try to hit this area many times. Actually, it was 10 times here, 10, 11, 12, 13, 14, 16, 17, 18, and again here. So they try several times to hit this ceiling and to break this ceiling, but they didn't manage to. And also I plotted this support area because it was hit 3 times and never break. So we have this is an indication that we have a lot of buying pressure. So this is a support area. So as I was saying, um, a good a, a good let's say a good way to spot trades is by checking for any indecisions on support and resistance level. This is quite important. Only indecisions on the support and resistance area that you have plotted. So, and this is what happened actually here. We can see that we had a preceding trend. So our asset was moving lower and lower and lower. Okay, but this candle over here, which suggesting decision. Why suggesting decision? Because it has a very long tail to the downside and a very small body, bullish body, observed body, or opposite body of the prior candlestick. So we had a strong bearish candle over here, but then this quite dodgy candle to the upside give us the sign of indecision, because um, we were in a downtrend, but even though the sellers are pushing further to the downside, the bulls managed to close above the open price with a very small body. So that suggests indecision in the market. So once you see an indecision on the support, either the support or resistance level, then as according to this equation, that implies to reversal. So we can see here was in decline, then we start in this support area. So we notice in indecision. Even if you don't notice it in this very first candle, you can notice it in the very next one. You see, it continues consolidating for 1, 2, 3, 4, 5, 6 sessions over here. It consolidates over here. It didn't manage to form in either a peak to the upside or a swing lower below the support area. So we have this indecision movement over here. So that implies to reversal. And that indeed happened. We've seen the asset, the price actually moving away from the support area, and it hit again the resistance area. Again, we can see an indecision in the resistance area. And what that means, if we see an indecision in a preceding trend, then that's implied to a reversal, and that it happened. So we are seeing again the price moving away again from this area, which is the resistance area. Okay, and going back to towards the support area, to the downside, decline again. This is a very common trading. So this and I believe that this is a very good example of a reversal trade. Reversal trade includes 3 things that I already mentioned. Firstly, you have to have a preceding trend, and you do have it. So initially you are in a downtrend. But if you focus, let's say, in this area, in this part over here, then the preceding trend will be this one on the upside. However, if you enter the market while the asset was over here, the preceding trend was this one, this decline. So the reversal trend includes 3 parts. Firstly, you have to have a preceding trend. Then you have to notice an indecision on support or resistance. And then you will eventually see a reversal of the trend. It's very, very important, the indecision, to be on the support and resistance area, okay? Otherwise, it won't satisfy you. It doesn't suggest that, it doesn't give the sign that it's a reversal. It will reverse to the opposite direction. So actually you have to ask yourself, okay, in this case over here, who is actually control the market? Is it bulls? Is it bears? For every single candle, you have to check, you have to actually ask yourself who is in control. So let's say I'm over here, okay, bulls are in control. Okay, what happened here? I noticed that, bears are in control. So in this area over here, in this candle over here, I noticed that bulls took the control. So that's with actually bears being fighting hard to push the asset lower. And how I identify this, because it is a very long tail to the downside. So I have a lot of selling pressure, but despite this selling pressure, bulls managed to take the control. So simply ask yourself who is in control. If you identify who is in control, then you will be able to identify the next movement. So have in mind, for every move, react on the preceding trend, you will identify the next movement. Okay, so every single over here, if I actually focus in this very first movement, the preceding trend is in the downside, so I have reversal to the upside. If, however, I enter the market over here, my preceding trend is to the upside, So the reversal is on the downside as long as I've identified indecision in the market. Okay. So ask yourself who is in charge, who is in control. That's a key part of price action trading, to be aware and to be able to identify who is in control, bulls or bears. So, okay, let's go to a more interesting example. So, can someone of you let me know which is the okay, before I go here, actually, yeah, okay, which is the preceding trend in this example? Okay, if let's say I focus on this movement, which is the preceding trend? So is it to the upside? Is it to the downside? Is the uptrend, exactly. So in this, if I focus only on this price, on this period, the preceding trend is to the upside. So what we can see over here is that our asset moved to the upside. It break the immediate resistance area, which was the one we identify in this. We identify like in the prior price movement. So it break that, continue to the upside, and it reach the next resistance area, the next ceiling. So indecision is over here in this candle over here, because we're in the upside and we see this weak candle, weak bearish candle with a very large tail to the upside. This suggests indecision. So we still have seen bulls trying to push to the upside, but sellers seems to gain the control because the price closed slightly below the open price, and we have actually a very, very small body candle, and that is indecision. Indecision can be identified either if you have a doji candle like this one, or if the body of the candle is quite tiny and opposite of the and it has the opposite behavior of the previous candlesticks. So we have identified indecision based on this candle over here, but also on the fact that for 3 consecutive sessions, it didn't manage to break this resistance area. So here we have an indecision. Presenting trend, check. The indecision checked, so we are expecting a down movement, and that occurred successfully. We have seen the next consecutive candle was a bear one, a very strong one below the decision point, and that's why we have seen this reversal to the downside again, hitting the next important levels, which is this area was previously was resistance, but now it has converted into support, and the very next one is at this low over here. So before we see the entry points and exit points, let me bring actually my MT4 and this dollar yen example that I have over here. So what I have done over here. Initially, my dollar yen in a 4-hour chart, it was drifting lower and lower and lower and lower until it hit this floor. Okay. At this area over here, this floor, I have identified that it continued to the upside. So I have plotted several resistance and support levels. Why? I noticed that it reversed to the upside here. So here I have a floor. I have a lot of buying pressure, which despite all this decline, this buying pressure were quite strong and reversed my asset to the upside. So I have put this, I put that in my watch list, and I put this line over here, this so I will have in mind that this is a strong support area. Meanwhile, in a downtrend, I noticed that for 1, 2, 3, 4, 5, 6, 7 sessions, the dollar yen tried to reverse from this decline and to move further to reverse to the upside, but it didn't manage for 1, 2, 3, 4, 5, 6, 7 sessions. So okay, I said, okay, that's supposed to be a resistance area. That's a ceiling that we have in this area. We have a selling pressure, so I put that on as well. So continuously, while once it hit, after it hit actually this floor, it reversed to the upside and found struggle to continue to the upside, reverse down again, upside again, reverse down again, upside again, reverse downside again, upside again, and reverse to the downside again and upside. So 1, 2, 3, 4, it hit this support, this second support, let's say this support area for 4 times. So another, I can identify that this is another support area. While to the upside, it tried to retest and it tried to break this area, this ceiling, 1, 2, 3, 4 times. It didn't manage. So again, you have another resistance area over here. Okay. So far we have 1, 2, 3, 4 exclusively from this movement that we saw to the downside and this consolidation that we have seen between 16th of October up to 29th of October. So purely in October, exclusively in October, we have identified this the 4-hour chart, these support and resistance areas. So how you can actually trade, how you could actually spot a trade based on using dollar yen as an example, let's say. So we have noticed that it reversed, the price moved away from this support area over here. Okay, move to the upside. So we're quite on the wait and see stance, whether we could see another indecision on the resistance or whether we're going to see a breakout of the resistance. And what actually happened over here is that we saw a breakout of the resistance because for 1, 2, 3 consecutive sessions, we have seen our asset moving to the upside, no doji candle, no bearish candle on the resistance level, no, we didn't identify an indecision on the resistance. What that means? It means that since we don't have any decision, then we don't have a reversals. So since we don't have any decision, then we have a continuation of the preceding trend, which in this case the preceding trend is this one, which is on the upside. So we are expecting to continue because we haven't identified any indecision. Or positively, we have seen that the pair converted this resistance level to a support level, because you see it went once upwards, 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 and then a reverse to the downside, but it didn't manage to move further, so it created a floor over here. Okay, it created a floor above on the resistance level, so this is converted to support level. You can say to me, oh no, I can see an indecision, I can see this doji candle to the downside, so that means that it can go back to reversal. No, because this is above the resistance level. It's not on the resistance level. The resistance, the indecision has to be must be identified on the resistance area, not above, not behind, not below it. This is way above the resistance, so it doesn't imply to an indecision in the market. it implies that we have created a floor over here, so further move to the upside. And that indeed happened. And as we have identified another resistance back here, back in 9th of October, back in 10th of October, so we believe that it will continue to the upside and it will manage to hit the next resistance area that we have plotted, which was over here. So do we have any questions? Looking at the chart, sorry. The spin tops gave a signal that it was coming. Correct, Josen. Thank you. Looking at the chart, it broke resistance. It should have become support on testing, but still broke through again. Are you referring, Christopher? Are you referring to this example, or it was the one that I was showing on as an example in the slides? So Christopher is saying, looking at the chart, it broke resistance. Okay, he's referring to this example, I think. Broke resistance and it should have become support on testing, but it still broke through again. Exactly. So if the resistance becomes support, so you don't see a move to the downside, but instead you see like hitting it many times but never managed to break it, this converts the reversal to a support area, because you notice it tried to go down once, it tried to go down twice, it tried to go down three times, it didn't manage, so this automatically from a reversal it converts to support. So the next candle is bullish. Okay, this one is bullish, so it suggests that it will continue with the same direction as his preceding trend, so to the upside. That was one of the examples. Let's move back to the dollar yen example. So this is the case. Once you see a breakout of your either support or resistance level, so what that it means. But if I focus over here on what happened over here, okay, initially I had this preceding downwards movement. So to the downside, it hit this floor and reversed to the upside. Down, reverse to the downside. So you can see that you can identify in every single reversal the indecision candle, let's say. So yes, indecision candle. Didn't manage to break resistance, small body, the tail, the upside tail and the downside tail is more or less of the same length, so that occurs in decision, while the next movement was to the downside. So that is a sign that our preceding trend, which was to the upside, it hit the resistance. We identify indecision, so that means reversal, and indeed went to the downside. Again, if we focus on this movement to the downside, and let's say this is our preceding trend, downside indecision. So as a very large, strong bearish candle, but the next consecutive one is a very small body candle to the opposite direction, to the upside, with a very long tail to the downside. So there is it seems that bulls trying hard they're fighting hard the bears, and they managed to close to the upside, and they rejected the support area, so they are moving up away from the support area. That's another indication of indecision. So you can actually place trades once after you have identified indecision on the resistance support areas, either over here or over here, a long position, again an indecision. This was not very clear one. You had seen this doji candle over here, but it was above resistance, so that wasn't a confirmation of a reversal yet. So if you wanted to trade something like that, you have to wait until until the price movement confirms to you that it is indeed reversing to the downside. And the confirmation over here comes at this candle over here, this bullish bearish one, which is a big body one, but it break below and close below the resistance. That was the confirmation, because the rest were above resistance and not on the resistance. So take care, not taking a trade based on something that you have observed above or below resistance. The indecision has to be on the resistance level, on the support level. Okay. So yeah, you could take a short entry once you have seen this movement below the resistance level. Yeah, that was about this example. Let's move on. Or you see that the same principle, the same way of spotting trades can be identified in every in a, in even in November. You see, it hit this floor. This floor was something that we have spotted back in at the beginning of October. So it hit this floor and reversed. We don't have a doji candle over here, but we can see the decision in the market because it tried to break the resistance once, two, three, four, 5 times, pushing quite hardly the price to move up. It didn't manage, but we have this strong bearish candle which closed below the prior price and in reverse to the downside. So it's again an indecision because we have bullish, bearish. So we have 4 consecutive candles which are positive, they have the opposite behavior. So up, down, bulls, bears. So bulls win, bears win, and the next one. Bulls won again, bears won again. So indecision. It doesn't have to be doji, it doesn't have to be a small body. Just identify that they are struggling to break your ceiling or your floor. That suggests reversal. So if I zoom in and say, okay, this upside movement is my preceding, and I notice that they hit the floor, they didn't manage to break it, and positively they return to the downside. Okay, I could take a short position, and my target could be on this resistance area that I had spotted before and is now converted to a support area. So that's a way of spotting a trade using price action. Let's move on to a next example. Shall I go back to which one? Okay, okay, before we see a 30-minute chart, because I want to prove to you that it can be applied to every single time frame, and we'll go back to my slides, and I'd like to see together how you could actually at which point you could enter the market, exit the market, etc. Prior that, I have highlighted this area over here, which is a good example that okay, we are running out of time. Okay, this is a good example that I actually cover this bit. Can someone? Okay, I'll actually make a question. Why can someone say to me why I shouldn't take a trade based on this candle, on this bearish candle? I had a preceding upside trend. It break my resistance, but I noticed that I noticed indecision because I saw this initially, this doji candle, and the next one is it has long tails and small bearish body, which is opposed to the preceding trend. Can someone say to me why I shouldn't take a short position in this based on this? I mean, okay, I see indecision. I'm already having a preceding trend to the upside. This, along with indecision, implies to reversal. So why I shouldn't take a short position? Uh, exactly, Della. Exactly, bravo. So simply because this is above my resistance area, is not on the resistance area. That's something you have to take care of, because its decision has been identified above resistance and not on it. Okay, so the resistance became support. Exactly. I have further questions. Can I use, okay, Martin is asking, can I use indicator pivot point chart for the return point of the market? Okay, if you're referring to pivot point analysis, the indicator that is already given in MT4, okay, the pivot point indicator is actually calculated based on the candlesticks of the day. So if you on the candlesticks of the, it has an average of the candlesticks of the day of the past candlesticks. So this is how it calculates and give us some resistance support levels. You can use them, but it doesn't necessarily means that okay, let me actually give, so if I, let's say, use the pivot point analysis indicator, okay, I plotted in, it's in a daily chart, it's a daily time frame, and here it is. So according to the pivot point analysis, the pivot point analysis is calculated based uh, on the closing, on the high, low, open and close price of the previous day. Okay, so these are plotted based on yesterday's values. Okay, but you can notice that if, let's say, I'm in a 30 minutes chart, it doesn't really give me proper resistance and support levels. And what do I mean by that? Okay, I have noticed that that this area over here was a quite strong resistance, but the pivot point gave me a resistance level above this area. Okay, it's not so far away. That might not be a good example, but let's, okay. It gave me a good resistance level. What about support? Did it give you a good one? No, no, no. This support area, does it seems to you a quite strong one? No. It was hit just once over here in these consecutive 5 candles. It never hit it before. It actually, in the previous sessions, it was actually consolidating around this area. So it doesn't necessarily means that it will give you a reasonable support and resistance area in the time frame that you want to trade. It can give you an indication, it can help you. So if, let's say, you're a 30-minute trader, you have to consider switching this daily pivot point into, let's say, 30 minutes one. Let's see whether it gives us a reasonable. Okay, if I zoom in, that one is reasonable. It was hidden many times as a resistance area, and now it converted into support. If you're using it, you have to check that they indeed satisfy your trading. They indeed confirm uh, they indeed give you a strong resistance support area for the particular asset in the particular time frame that you are trading. Okay, so be quite careful of how you could use them. I can't find that they give me reasonable values in a 30-minute chart. You see, because they are purely calculated based on the previous period, so these have been plotted based exclusively on this candlestick, the previous 30-minute candlestick. So they give us this support and resistance level, which they cannot really help you if you consider that this is my presetting trend, this move to the upside. So yeah, you have to be careful about it. On the yen inside the box, the second is indicating indecision. Okay, we have a question on dollar yen. This in the box, the second candle. So on the dollar yen inside the box, the second candle is indicating indecision. I think we have already replied to it, to this question. The second candle, you're referring to this one? I assume no. It's a bullish one. It's a strong bullish one, actually. It has a big bullish body, so I don't see any kind of indecision over here. It's a clear breakout of resistance. And let's on impulse and corrective waves without the Bollinger Bands. It's a different topic. Yes, it is possible to identify without Bollinger Bands. Bollinger Bands are not necessary for identifying impulse and corrective waves. You can identify it purely by checking the movement of the assets. So you have over here, let's say you have and downwards movement is one wave, correct impulse, correct impulse, correct impulse, correct. So I don't want to spend time on this question because I will confuse the rest of the team. So sorry, Netson, please email to us at the webinars@wholeforex.com and I will try to reply because it's a different topic and I don't want to mess with price action trading. So let's move on. I want to show you how you could take your entry and your where you could take your entry point, or where you could actually set your stop loss and target. So actually, I didn't manage to cover all the examples that I wanted to. Okay, I could just briefly saying this is a very, very clear example in a 30-minute chart. You have a consolidation over here. So obviously this is a support area. This is a resistance area. So on the breakout of my support, this suggests it's a strong breakout if you notice that. So imagine a line over here because it rejected this area once, two, three, four times. So imagine this is a support area. On the break of this area, I have a selling signal. So especially because my candle it has a full bearish body and a strong one. So it closed very, very close to the low price. So close price and low price are very, very close to each other. So that suggests a huge selling pressure. So that's another way of checking the candles. Tails and bodies matter. Open and close prices do matter as well. You see, if your close price is just a few pips away from your low price, so that suggests a strong bearish momentum. So the movement to the downside, the selling pressure. Okay, that was one example. Okay, so I had many examples, but let's move on to something that I believe is more important for you, which is the stop loss, entry point, and targets, because we already ran out of time. No, we're already 12 minutes past the hourly session. So, how you could actually trade. So I'm getting back to this clear illustration of the price movement. So I had this preceding trend over here to the upside. I noticed this indecision, so I own the resistance level. So I decided that this is my opportunity of taking a short position. So what's the most appropriate um, the smartest, let's say, place to enter the market? As we're saying in every single webinar, you have to enter the market once you have a confirmation regarding your thoughts, regarding your decisions. So I have decided that this is a decision I'm taking a short position. So I'm waiting for confirmation. So in this example over here, you're getting this confirmation based on the next consecutive candle, which is a strong bearish one. So I say I could enter the market once the price moves below the previous low. Okay, so you could enter the market once you see the price moving below the previous low. So the previous low is on this candlestick. So the previous low is around here. So I'm placing just a few pips below it, my entry point. This should be your entry point, because if that happens, it gives you confirmation that the selling pressure is strong, and so it will push the asset to reverse to the downside. So that has to do with the entry point. If you missed, let's say, or if you prefer another entry point based on your risk and reward ratio, it could be on the closing of this candle. So you're waiting to see where is it closing. Is it closing? Sorry. Is it closing bearishly? If yes, I could enter the market once I saw on the closing price of this consecutive candle after I have identified the indecision. But ideally, the idea here is to trade once it break your previous low. Okay, so a good entry point is this area over here. Where should you set your stop loss? A reasonable and a smart place to set your stop loss is above the resistance area. So above the resistance area, and also above the peak of this descending trend. So you can set your stop loss slightly above this area, above the high of the previous candle, or at the peak of this trend, let's say. So slightly above is a quite smart and safe place. You can say to me, oh no, I want to be I don't believe this is a place safe. It's a safe place. I want to put it over here because it's even safer. Okay, that's fair enough. You can place it over here. It's even safer, but it will reduce your reward, because everything has to do with a reasonable risk and reward ratio. So you have to, if the highest the stop loss is, the lower the reward for you will be. So you have to find a balance on that field. You have to have a reasonable risk and reward ratio. We are saying that a reasonable risk and reward ratio is 1 to 2, or 1 to 1.5. So what do we mean by that? Your target will be will be 2 times lower than your stop loss. That is a reasonable risk and reward ratio, 1 to 2. Risking once, but rewarding double. Okay, that's a risk and that's a reasonable risk and reward. So you don't risk much, but you are anyway benefiting double that what you're risking. And so that's how you could set your target based on a reasonable risk and reward ratio. So on this chart over here, you can identify that I have put my stop loss above the peak of the trend, slightly above the resistance. That means slightly above the resistance. And my target was uh, uh, 2 times that double of what I have risk. So this distance, the distance between the entry point and the target is double than the distance between the entry point and the stop loss. Another target you can claim that would be the previous resistance area. That's another reasonable target. But I'm saying that this doesn't really matter. What matters is to have a reasonable risk and reward ratio. Okay. Yeah, that's how you could a simpler way to set your to open the position and set your profit and target. So just a summarize of what I said is that stop loss, a smart place to set your stop loss is behind support and resistance area. Okay, not too wide because you're losing, you're decreasing your reward, your potential reward. You have you will risk too much and you will just benefit less than this, much less. So it doesn't have to be too wide. Even if you believe it's safer, I mean, it's safer to set your stop loss far away from your entry point. Is also risky because if the asset reverse, then you will face major losses, but also you have a reduction in your reward as well because you have risk a lot. Okay, and so the risk and reward will be quite high. Also, the stronger the better. More barriers in that area makes this area a stronger one. So what I mean by that, if you're let's say this support resistance area, it was hit many times and failed to break above it, the asset failed to break above it, that means that this resistance area is a strong area. So the more barriers we see in this area, then this implies that this is a strong area. So it's a good stop loss. It's a strong stop loss. It's a good stop loss. It's a reasonable stop loss. So the more barriers you see, the stronger area. That implies that the stronger the area is. Okay, where is a smarter place to set my target? A smarter place to set your target is in front of support and resistance area. And based on the risk and reward ratio, a reasonable risk and reward ratio will perfectly works for you. Don't get greedy. Don't set your target far away just to benefit more profits, because by getting greedy you might missed benefiting, because if you put it far away on the anticipation that I want to gain more, so I put it far away and not in a reasonable level, then you might see your asset price reversing and then you will end up losing. What I mean by that, okay, I entered in this entry point over here and I get greedy. I said, no, I don't. I think it will go back to this floor. So this is what 1, 2, 3, 4, 5, 6 times, six times lower than my entry point. Okay, this is a far away. You might end up seeing your asset reversing in the next consecutive support, in the next immediate support area, which was always over here, and reversing to the upside again. So you will actually lose what you have actually uh, uh, risk in such a trade, because your target wasn't reasonable enough. It was far away from the entry point, and that's why it wasn't supposed to be a reasonable target. Reasonable target, it should be either based on a reasonable risk and reward ratio, or based on, it could be set also on the immediate resistance and support area. So the next immediate support area is this area over here. Okay, so another target could be placed over here. Target 1 at this level, target 2 at this level. So yeah, the weaker the better, so less barriers in that area. So what I mean by that is that since I haven't seen this support area hit so many times, so it's not supposed to be a strong one, it means that my asset could easily reach to this target. Okay, the weaker the better, the less barriers in that area, then is supposed to implies that it could be easily reached. So guys, I have to, we are nearly at the end. The next slides that I have are examples. Actually we are already in a 1.5 hour session. We already out of time. So if you have any final questions, now is the time to stick them in the box before I end up with this session. I didn't expect that okay, let's see some questions. Okay, already replied to some of them. How to enter, exit, and support, enter and exit the market. We already replied to it. What is the work of fractals? Just ignore them for this webinar. Okay, I could briefly say that the fractals actually helping us to identify easier the resistance and support area. You see, it's just a more of a catches your eye. It's like you identify, oh, it tried once, it tried twice, it tried 3 times, 4 times, 5 times. So this is a resistance area. But I don't want. So give us some give us an indication of reversal. Fractals usually give us indication of reversal. So usually what we're saying in a simple terms, an up fractals means that the immediate reaction of the next reaction of the asset is going to the opposite direction. So the up fractal reverse to the downside. If we notice a down fractal, it means that we reverse to the upside. So it's a reversal indicator. Okay, but that's another something else. It doesn't have to. It is not closely correlated to our price action trading seminar. You can use it if you want to. It's a very good tool. It gives you a better understanding of the market. But yeah, we are focusing on price action trading on this session. So good day. Sorry for this time. I am listening to this webinar. Can I please ensure that I get an email this link? Don't worry about it. Bianca will email to you after, like within the day. Support will email to you. So, any further question, guys, before I close, I end up this session? Sometimes support can be broken and retest and still be broken again. How is that? I'm not sure if I understood what you're asking, Christopher. You're referring to something, let's say if I'm taking this example into consideration, are you referring to something like that? Retest, retest again, retest again, retest again. Is that what you're asking? Sometimes. So okay, over here we have a retest of resistance. But you have noticed that these candles had never closed above this resistance area. So they retested it, but never break it. Okay, by saying break it, we mean that it has a closing above resistance or a closing below support. If let's say, you see here the body closed above resistance, so that's a bullish indication. Here it reached this key level over here and reverse to it. So that is a support area which it didn't break. It was retested, but it reversed to the upside. It break over here. This is a break of the support area because the candle closed far below the support area. So that's a bearish signal. It didn't reverse. It's not. We don't have an indecision. We have a clear selling pressure. It's not, we can't identify any indecision. We identify indecision in this area over here because we have seen retesting it, but the next consecutive candle is opposite of it, is bullish. So bearish, bullish. Here we can identify indecision. Here we have indecision as well. Doji, bearish, bullish, bearish. So bullish, bearish, bullish, bearish. Nearly 4 consecutive candles with an opposite view. That means indecision. Yes, so you want another price action webinar? Is that your question, Miguel? Or you're referring to anything else? Do you want me to cover something else in an upcoming webinar maybe? So yeah, so no more question, guys. Okay. Okay, I don't see any further questions from you guys, so I have to end up this session. Before I go, I find this quite interesting. We have rejection of the support level once, so reversal to the upside, rejection of the support levels twice, so reversal to the upside, and then it retested again at the support level, but we haven't identified an opposite candle, so we didn't have a bullish one. Neither, we had only bearish, bearish, a doji one, bearish, a doji one. So we have 1, 2, 3, 4, 5 consecutive bearish ones and a doji. So that is not a clear indication of reversal. Is not an decision. It's a more of a neutral to bearish bias. So this is what it gave us a confirmation of taking an entry either long or short. So this was a clear indication of taking an entry short because it closed below support. Okay, break and it closed below support. There is not a best time. It can be applied to any single time frame. You see, I show you examples of a weekly basis. I show you example of an hourly basis. I gave you examples of 30 minutes chart. It can be it satisfy every single time frame because it's a price action. It's purely the movement of the price. So the price in a particular in the time frame that you will choose. So you are reading the candlesticks, you are reading the movement. Either that one is it is in a 30-minute chart or in a weekly chart. So it's your own judgments, your own thoughts, your own observations on a clear chart, on exclusively on the movement of the price without any technical fundamental analysis. Yeah, another example. So guys, I have to end up the session. Hopefully you have enjoyed. Hopefully I have helped you as much as I could. For any questions, please email it to us at webinars@hotforex.com. You can also contact us, as I already mentioned, at Facebook at Stuart Hotforex Cowell. Thank you for your questions. Tomorrow's webinar is Futures Transfer and Commodity Channel Index Indicator, live analysis every Tuesday, and high Kenashing next Wednesday. Thank you for watching. For any questions, just email to us. Thank you for watching. Bye bye. Have a great rest of the day and safe trading. Bye bye.